Hi, Jonathan Newell by Financial Partners, looking at investment markets. So the US has avoided a extended shutdown on the government, but it's only really been sort of extended till around sort of September, and there's still certainly issues out there that need to be addressed. One of the major issues is the funding for the Department of Homeland Security, Kirsty Noem's department, and that agreement for that extended funding was only very temporary, sort of 2 to 3 weeks. Interesting looking at the jobs data because with the government shutdown, the non-farm payroll number was delayed. But on the private jobs data that's coming through, manufacturing is continuing to lose jobs and has done for around the last sort of 8 to 9 months. Now that's obviously contrary to what Trump claims that manufacturing is coming back to the US. Retail sales were a little bit disappointing as well. They were pretty flat for December after a plus 0.6 rise in November. And again, that goes against the sort of hottest economy that Trump claims the US economy is. Now, obviously, there's been a huge sell-off in crypto as well. If you look at it, last sort of October, Bitcoin was above 120,000, whereas recently it touched as low as 60-odd thousand and is currently trading around sort of 68,000. So that's obviously a big fall, and with a lot of that trading done on margin, that has resulted in some pretty wild volatility in the equity markets. Also as well, seeing a bit of a switch out of sort of high tech on some of those valuations into the more broader economy. And again, with those sort of high tech stocks, the earnings have been pretty mixed. Alphabet was a pretty good set of results. Amazon a little bit disappointing, and they're sort of resulting in maybe sort of a 10% sort of increase if the results are better. But if earnings sort of miss or are a little bit disappointing, you can see maybe 10 to 15% sort of taken off the share price. That obviously has some pretty major implications out there for a lot of the ETF index funds with share prices falling. Now, on the back of that, potentially sort of weaker jobs data and also the weaker retail sales, interest rates and sort of bond market have come down a little bit in the US. 10-year currently 416, the 2-year 346, and the 30-year 481. Now, as yet, there's been no further news coming out of the Supreme Court on the tariffs, but also as well on the case against Lisa Cook and also Jay Powell. But what is interesting as well is that whether he believes them or not, the polling for Trump at present is record lows. And potentially that could have some major implications out there for the midterms, which are in November of this year. So despite the US stock market reaching record highs, it doesn't seem to be sort of transferred onto the main street, which, after those retail sales numbers and the jobs data, still appears to be a little bit soft. Now, oil's traded back up just over $64. And that's really on heightened worries about Iran, as Trump continues to make sort of threats and accusations about the administration in Iran. Just as in the US, the Epstein files just won't go away and potentially causing some major headaches out there for Prime Minister Keir Starmer. Now, in the EU, as the Ukraine-Russian conflict, drags on and sort of just about to enter its 5th year, it's just going to be interesting to see how that sort of plays out, because at present Putin is showing no signs of wanting to end that conflict, despite what he might say publicly. And likewise, for all his bragging about being able to end that, pretty much on day one, Trump appears to be running into a brick wall and making no headway in trying to find a solution to that conflict. Now, in Australia, after the Reserve Bank just hiked the interest rate by 25 basis points to take the cash rate up to 385, it's just going to be interesting to see how that sort of plays through. And potentially, you're looking at sort of one further hike this year. Possibly two if inflation continues at those elevated levels. Now, interesting here in New Zealand, because obviously inflation is still running a little bit above the Reserve Bank's target of 1 to 3%. But at 3.1, it's only just above there. And, if you look at the breakdown with international travel resulting in a pretty major increase, it's unlikely the Reserve Bank will change rates at its next meeting. Indeed, looking at it, the economy is still pretty soft out there. The recent employment data was, again, a little bit above expectations. But what was interesting was more people are actually looking for jobs out there. And also the wage pressure was pretty muted as well. So business confidence rising, consumer confidence rising, the housing market starting to pick up on the back of those lower interest rates. There is hope that the New Zealand economy should see some growth over the next sort of 3 to 6 months. And hopefully that will see the economy then a little bit more resilient to potentially being able to absorb a rate hike towards the end of the year. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.